Hi everyone, this is Ch2. Welcome to a new video of this forex trading course. In this video I'm going to be talking about triangles, alright, actually about breakouts of a triangle formation, okay, of a triangle price formation. Firstly, let me define what a triangle actually is. A triangle is nothing but a consolidation area, okay. It's basically a sideways price action that it's taking shape of a triangle, obviously. Sooner or later the triangle is bound to break, okay, in either direction, and that's the breakout we are going to try to profit from. All right. Basically, the way I see triangles, the way I always explain them, actually a triangle or any type of congestion area is basically price needs to take a breather. It needs to slow down a little bit before gathering momentum enough to continue with a whole new swing. Hopefully in the direction of the main trend. As you guys know, I am a conservative trader, I am a trend trader, and that means that I will only take breakouts of a triangle or breakouts of any price formation that take place in the direction of the main trend. If as example, if we have a downtrend at some point in the trend, I spot a triangle formation, any breakout against the trend will have me canceling the whole setup, okay, definitely not taking any entry, and furthermore probably canceling the whole setup altogether. I will only be looking to trade breakouts in the direction of the main trend. More often than not, the trend, if it is a strong trend, a solid trend, usually finds its way around to push price to break in the direction of the main trend. That's what usually happens. Nonetheless, like I say, sometimes we do get breakouts against the trend, and I will never take those trades. Okay. There are different type of triangles depending on how what type of shape, how they shape up on your charts. Basically, we have flat top triangles. Okay, basically it's a triangle where price, once it gets within the consolidation area, it bounces up and down within the triangle boundaries, and you see different swings topping out at the same price level, okay, whereas the lows of those swings are not following a sideways, are not falling in a straight or horizontal line, but are actually on a sloping line, okay. Moreover, the opposite also holds truth. We can have also a flat bottom triangle, okay, in where price, once gets into the triangular consolidation area, you see different price swings, different candles or swings altogether, bottoming out within in a straight line, whereas the highs of those swings are actually leaning down, okay. And eventually you have the third type of triangle you can have is basically all the rest, okay, where both of the lines, both of the boundaries of the triangle are basically leaning onto each other, okay, one pointing up and the other one pointing down, okay. It does not have to be a perfect triangular formation, okay. It can be a leaning triangle. That would have been a flat bottom triangle, but like I say, perhaps you might have one of the trend lines leaning heavily, and then the other one not so heavily, okay, some sort of of a down I don't know really how to say this, a downward pressure in triangle, whereas like I say, the triangle top is showing a higher degree of angle, okay, of inclination than the lower band. Anyway, enough talking. Let me show you what triangle actually is on the charts, and you will get the idea right away. Okay, in this video I'm going to be showing you, like I say, different type of charts, each of them showing different type of triangle formations. First of all, let's start with the GBP against the American dollar of the daily time frame, and I want you guys to look at this portion of the chart. Okay, as you can see, price comes from a clearly down move, alright, then enters a period of sideways consolidation before breaking below for a whole new swing to the downside. As I was saying before, sometimes as price moves heavily into one direction, bears and bulls need to take a breather. Okay, the market needs to reassess the situation and before breaking out into either into either direction. I would only take the ones that break in the direction of the previous of the overall market sentiment, which in this case it's clearly down. Okay, clearly down. Okay, in this case we can see a triangle in the central part of the chart. Okay, it's the one I'm marking right now. Actually, I'm gonna mark it in blue in my screen, and as you can see, it's not either a flat top triangle or a flat bottom triangle. Okay, it's just a regular triangle. Okay, there we are. Basically, as I was saying before, price swings down, takes a breather. The bulls and the bears sort of come into an agreement, at least for the time being. All right. Before deciding, as the price nearest closest into the vortex of the triangle, it is always bound to break to one way or the other. It cannot keep on going sideways forever, right? It's got to break to either one side, and more often than not, as I was saying before, if we are in a sound trend, it usually, like I say, breaks in the direction of the previous move, right? Meaning if we were coming into this consolidation area from above, most often than not, it should break. If this is a strong trend line, strong trend, sorry, it should break in the direction of that trend. Okay. Excuse me. Now, there are different ways of profiting from a triangle. Okay, I'm gonna explain you the way I personally trade triangles, the way I personally like to profit from them, if I can profit from them, of course. And I'm gonna be doing that by zooming into the shorter time frames. As you guys know, I usually check two time frames. One is the time frame what I call the setup chart, which is basically the time frame in which I spot the price formation. Okay, the chart in which the trend clearly shows itself. In this case, is the daily chart. Okay, once I have I have the pattern identified, then I zoom into what I call the trigger chart, which is usually the smaller or the shorter time frame, let's say 4 times shorter or 6 times shorter than the setup chart. If for example, in this case, the setup chart is a daily, so I would zoom into the 4 hours time frame in order to spot or to search for my entry. So now I'm zooming into the 4 hours time frame. I am scrolling back in order to find where exactly I left the. If I can possibly find it, which I don't know where it's gone. Give me just 1 second. Okay, one second, guys. I'm gonna stop the video and I'm gonna find my triangle. 1 second. Alright, there it is. I had lost it. Okay, so as I was saying, price clearly gets into this consolidation area, bounces up and down within the triangle boundaries, basically moving sideways as you can see, but also tightening in, okay, with higher lows and lower highs. That means that basically it's squeezing in within the triangle, okay, gathering momentum until the it closes in the vortex area, and from that, it's bound to, as I was saying, to break to one of the sides. Since we were coming from a downtrend, okay, from a down move into the consolidation area, I would only look to try breakouts in the direction of the overall market sentiment, which in this case it was clearly down. All right, the way I personally tried excuse me, the way I personally try triangles is the conservative way. There are two ways of possibly trading a triangle, or actually any type of breakout. I'm going to show you both. I'm going to show both ways to you, and well, you can decide whichever you think it suits your trading personality better. All right. First of all, let me show you the aggressive way. The aggressive way is basically triggering upon a simple the initial breakout of the actual range bound area. Okay, that means that we would place a bracket order a few pips beyond the boundaries of the triangle. In this case, only the lower end of the triangles, since we are only trading in the direction of the main trend. Okay, we would basically place a sell stop order, okay, which I am marking right now. Let's mark it, let's say, in green. Okay, in our broker we would place a sell stop order a few pips below the triangle bottom, let's say 10 pips, 20 pips, depending on the time frame. Of course, if it's the daily chart, we need to give it a little bit more of breathing room. If it's the 15-minute chart or the 30-minute chart, if we are trading a very intraday type of trade, that would only be a few pips, perhaps 5 pips, something like that. But nonetheless, it depends on the time frame. But at any rate, we would simply place a sell stop order few pips below the lower band of the triangle, okay, and as soon as price breaks through, our broker will automatically fill us in the market. Okay, it's as simple as that. We wait for no confirmation, we wait for no further signal other than the breakout in itself. Okay, that's not the way I personally trade breakouts, because sometimes we see what I usually call a fake out. Okay, a fake out is nothing but I always say that markets are not perfect, swings are not perfect, and they usually don't respect levels of support and resistance right to the pip. Okay, also you've probably heard about stop loss hunting by large institutional players. It's basically the people who trade large amounts of capital. They push price very quickly into one direction. They shake out many stop losses, and then they let it continue on its merry way, in the direction it was meant to go. Okay, so basically they artificially spike price, very briefly for 1 or 2 bars. They hit all those stop losses. They shake all the weaker fishes out of the pond, and then they let the currency pair go on its merry way without all those small traders, since they kick them out of the market with that random spike, okay, they create. Anyway, so if you trade aggressively, basically placing a sell stop order few pips below the lower boundary of the triangle, sometimes what we see is a quick dive below the boundary, just enough to perhaps trigger your entry, and then it goes back into the back into the triangle in itself, okay, back into the triangle consolidation area. As I'm saying, that happens more often than you would think, okay, and it can be really nasty and really frustrating, because basically you are clearly spotting a nice down move, then you're spotting a triangle formation, a consolidation area. You place a sell stop order few pips below that, and price basically fools around with you. It dives down, hits your sell stop order, you are filled in the market short, and then it simply snaps back up, you know, within the area. You are already in the market and the breakout has not confirmed, okay. That's in my opinion, as a conservative trader, that's a situation you don't want to see yourself involved with, okay. Many times it does work, okay. Like I was saying before, most of the times the breakout does happen in the direction of the main trend, okay. So it does happen. However, in my opinion, it's just not safe enough to just simply trigger your trade as the triangle gives way. I like to wait for a breakout, for a confirmation of the breakout, and that confirmation usually comes with what I call the breakout pullback continuation pattern, okay. Now please, I want you to have a look at this part of the chart, okay, right as the breakout takes place. Actually, let me zoom in a little bit for a clearer view. There we are. Basically what we have is a breakout, okay, below the boundary of this, the lower boundary of this triangle. And from there, if you have a close look into the chart, you will see two green bars, okay, this bar and this bar. All right. That's the pullback part of what I was mentioning before, the breakout pullback continuation part, okay. Basically, price breaks out from that consolidation area, then it pulls back to retest former levels of support, in this case the lower trend line, the triangle bottom, all right. It was working as support here, and then once broken, it turns resistance, okay, which is what actually happens here. It's nothing but former support turn into resistance. I'm sure that's a trading principle you've heard a number of times. And it's actually true. So it's actually true. It does work. Okay, it does work like that way. You see the breakout, then you see a pullback retesting previous support levels, now working as resistance. And once that resistance is confirmed, once price tops out at that level and continues to move in the direction of the original breakout, there is where you trigger your short entry, because, well, the market has already given you confirmation that the breakout has, it's a valid and it's delivered through, okay. In this case, the short entry would have been triggered just as we pipped a couple of pips below the breakout thrust, okay. Any breakout pullback continuation pattern, it's formed by three parts, okay. The breakout thrust, which is this initial breakout, then the pullback I was just mentioning before, retesting previous levels of support, now turning to resistance, meaning this trend line, okay, the lower band of the retracement of the triangle bottom. And from there we have the continuation part, which is basically a new swing in the direction of the initial breakout, signified by those red long bars, okay. So as we peep below the breakout thrust, this being the breakout thrust, guys, this being the breakout thrust, then this being the pullback, and this being the continuation. All right, sorry to repeat that so many times. I just want you guys to understand this this concept very clearly, because it's basically one of my main trading tools, so I really want you guys to understand this. So as we make a new low, this being the low of the breakout thrust, okay, as we take out upon the pullback, okay, after the pullback, once we continue moving down and we make a new low below the breakout thrust, that's where I trigger my short entry. All right, right there. Right at that level. A couple of pips is usually good enough, okay? No need to wait anymore. You've had already the confirmation in this shape, in this pattern. So as you make a new low right there, a couple of pips below, you can enter short in the trade, knowing that you're taking a high probability trade for few reasons. First of all, let me zoom back out. First of all, you are trading in the direction of the overall market sentiment, which, as we saw on the daily chart, is down. Okay, we had a nice downswing, a period of consolidation, and another downswing. Okay, the overall market sentiment is to the downside. Okay, that's the first reason as of why you are stacking up odds on your favor. Right. First of all, like I say, the trend. You are trading in the direction of the main trend. Second, you are trading a breakout in the direction of the main trend. Right? You are just not taking a trade out of the blue. You are taking entering a breakout in the direction of the main trend. Once the consolidation area decides to give way, you don't take the trade here or one second, let me clean up the chart. You don't take a trade here or here or here or here. No. You wait to the breakout. Okay, you only enter the trade once the breakout has given way. Okay, sorry, once the triangle, the consolidation area, has given way. Okay, so it's not like you are taking an entry blindly. All right, you are waiting for the right time to take your entry, and always in the direction of the main trend. And finally, the third reason as of why this type of setups are a high probability trade is because not only you are trading in the direction of the main trend, not only you are waiting for the right time to enter the trade, but also you are waiting for the confirmation of the breakout. Okay, the confirmation comes, as I was saying, in the breakout pullback continuation pattern. Okay, it shapes up as that once you confirm that previous levels of support becomes resistance. Once that's been confirmed, and once after the breakout, you get 1, 2, 3 bars, green bars in this case, since we are trading short. We are leaning towards the short side of this trade. Once you get few green bars, sometimes it's just one bar, one green bar, and therefore it's a 1 bar pullback. Sometimes it's 2, sometimes 3, but not usually more than that. Okay, a good breakout should not need more than a few bars. The whole breakout pullback continuation should not be formed by more than, I don't know, let's say 5, 6 bars, no more. Okay, you want it to happen in momentum. That means that you want it to happen fairly quickly. You don't want price to break out, then meandering around for a little while, and then very slowly continue to move down. Now you don't want that. What you want it's a clear breakout, then perhaps 1, 2, 3 bars pullback, and then another momentum thrust in the direction of the main trend. That momentum thrust is the most important of all. Okay, you need a clean breakout. You need a breakout in momentum. In this case, we can clearly see that we have a nice red bar in the direction of the breakout. That means that sellers are outnumbering buyers. Okay, and that's why you get large massive bars in this breakout. That's a nice indication that the breakout is going to deliver. Okay, that the breakout is going to go through and it's not going to fizzle away at some point of the midway through. Okay, if you have a look here on the next swing, also you have a few bars as a pullback, and then bang, another nice momentum down, and also you have the same indication few bars later, okay, a little bit of a pullback, of a consolidation, and eventually bang, the bears come in play again with another large bar. Okay, we gotta read price action, guys. Price action is very important. Momentum reading, especially when it comes to breakouts, are important. And in this case, that signified when we have either the breakout or the continuation part in high momentum, meaning long bars. That's the best indication you can have that the breakout is going to be a valid one, and you want to be riding that breakout always in the direction of the main trend. Okay, please guys, memorize by heart the breakout pullback continuation part. Train your eyes, go through your charts, scroll down, scroll back in time in your chart, try to spot out previous breakout, and try to search for this type of breakout pullback continuation patterns, because whenever they happened, they usually give way to a very nice move. Okay, and very quickly, have a look at this. Okay, have a look at this move. Very nice, swift, and painless free trade. Sometimes, of course, sometimes price doesn't quite give you the breakout pullback continuation. All right, sometimes price simply plummets through, okay, drives through the triangle boundaries, and well, it just simply moves 100 pip without giving no pullback whatsoever. But that's the cost of being conservative. Okay, at the end of the day, we gotta decide whether we wanna be aggressive traders or conservative traders. Being a conservative trader means that you will miss out on many trading opportunities. You will let many trading setups go, but those ones you will take will carry a higher degree of win-loss ratio. Again, in my opinion, that's important. I want to know that those trades that I do take carry a 65, 70, 75% of win-loss ratio, all right? Of chances that the trade is actually be a winner. I'd rather miss out on few trades, making sure that those trades I take, like I say, I'm having the chances on my side. Okay, so that's basically it for this type of breakouts. Okay, just recapping a little bit, two ways of trading: simply placing a sell stop order few pips below the triangle lower boundary, or upper boundary if we were in an uptrend, but in this case, since we were in a downtrend, few pips below the lower boundary, we place a sell stop. Once price breaks out, we will be automatically filled in, hopefully to ride for a new swing down. That's not the way I do things. I like to wait for the breakout pullback continuation as signified in this part of the trade, and always it is a nice plus, okay, a nice bonus if you see the breakout and the continuation signified on your charts by long red bars, okay, such as it is in this case. It means that the breakout is being delivered in momentum, and it has higher chances of moving through in your direction, okay, and therefore, handing out some pips in the long term. Alright, now I'm going to be showing you now another type of triangle. Remember that at the beginning of this video I was talking about flat bottom and flat top triangles. Well, in this case I'm going to be showing you a flat bottom triangle, okay, which is basically marked here in my screen. That would be I'm going to mark it in blue. That would be the bottom of this triangle, and then marking the top part, the top band of that triangle. Okay, there we have it. It's basically, as you can see, we have 1, 2, and 3 bars, 3 different swings. If you wanna see it that way, bottoming out at that precise level, same level, and then we can clearly see that from there we are making lower highs. Okay. Also price swings down into the triangle formation, and therefore I would only be looking to trade breakouts to the downside. If this triangle gives way to the upside, the whole thing would have been cancelled. Okay, in my opinion, flat bottom triangles or flat top triangles are the same thing. Flat bottom triangles are I like them better than regular triangles, and I'm gonna explain you the reason as of why this is the case. Basically, if we have a downtrend, okay, a down move into the consolidation area, and we keep making lower highs, okay, within the triangle, we are basically building up pressure, okay, the bears are building up pressure onto the bulls at this level, okay, at this price level. Basically what happens in this type of cases is that the bulls are, this is the bulls' last line of defense, and the bears keep unleashing attacks to this level, okay, and the bulls reject them once, reject them twice, the bears try to unleash another attack, the bears defend that level, the bulls, sorry, defend that level once again, but eventually the pressure, okay, keeps closing in and closing in and closing in, and eventually the bulls cannot keep up anymore, they cannot defend that line anymore, and well, they give way, and a whole new swing to the downside in the direction of the main trend it's created, okay. So basically that's the idea, okay, the logic behind this what a flat bottom or a flat top triangle is, okay. Always remember, in the direction of the main trend you have a clear level that's working as the bull's last line of defense. This is the key level to keep an eye on, okay. This is the main level you want to set your sound alarms to, okay. Perhaps a couple of pips below that, and from there simply follow whether you are making lower highs, okay. If you're making lower highs, the pressure is definitely being built onto the downside upon this very level, and once it gives way, well, you are good to go to search for a short entry. Just as I was mentioning before, basically two ways of trading this thing. Simply placing a sell stop order few pips below the triangle bottom, and once the breakout happens, you are in the market, automatically in the market. As usual, I like to wait for the confirmation. In order to do that, I zoom into the shorter time frames. In this case, it's the 1 hour time frame, since the setup chart was the 4 hours chart. That means that I will look to enter the trade in the hourly time frame. Okay, basically now you can see here that we have the same setup as I was mentioning before, the breakout pullback continuation, and also it follows the same nature. Once that level gives way, okay, this level, the triangle's bottom, it breaks out in momentum. You can see how we have few different, few consecutive bars on red color, okay. No green bar there whatsoever. It's a clean breakout. Then you have 1, 2, 3 bars in green, which is signified by these 2 bars in this case, retesting former support levels, okay. This level, okay, this triple bottom, that was basically before the former support level, and now once broken, it becomes resistance, and as you can see, price tries to pull back to that level. It finds resistance there, and then once again we have the continuation part of the breakout with a long red bar, okay, a long momentum bar. It means that bulls are definitely in control. Not only they've been building pressure all throughout the triangle, building pressure, as I was saying before, to the downside, but they've had a clean breakout, Then we see a couple of bars of pullback, and then bang, another long red bar. Okay, and once we take out the breakout thrust, meaning this breakout thrust, okay, once we take out this low, a couple of pips below, right there, it's our signal to enter short. And as you can see, well, it was a profitable trade. Basically, it's the same type of setup, okay? The regular triangle or the flat bottom triangle, it's basically the same thing. It's just that I like, or I prefer, or I favor flat bottom triangles in a downtrend better than regular triangles, because there is one very clear level to keep an eye on. It's so much easier to try this type of setups when you have a leaning triangle, you know, a regular triangle. This level is it's not a straight line, it's not a clear level you want to keep an eye on. So once it breaks out, then you just simply wait for the pullback and bang, off you go. Very simple. Here, whereas it's basically the same principle, the former support level, once broken, as I was saying, turn into resistance, is not as easily definable, okay, because it's a leaning line, okay, it's a trend line with a slope, and therefore it's not so easy to keep an eye on. That's why I prefer to see flat bottom triangles in a downtrend. In fact, it's one of my favorite trading setups. Okay, I like to keep an eye out for these type of setups because they are high probability chances and they are very easy to trade. You know, simply spot how price makes lower lows. You get the breakout, and once the pullback is finished, you know, simply place your sell stop order few pips below the couple of pips below the breakout thrust, and you're good to go. You've got nothing else to do. Of course, if once price breaks out, the pullback goes all the way within the congestion area, meaning the triangle. If it goes once again, then the breakout is not as clean anymore. Remember that the confirmation of this type of setups comes in the shape of former support now working as resistance a little bit farther on in time. Okay, former support, guys. Once it breaks, it turns resistance right there. Okay, that's the confirmation of the breakout as it makes new lows right there. Therefore, if after the breakout, okay, if after this breakout price shoots back up into the congestion area and therefore not respecting this previous level of support as resistance, okay, that means that level, even though it worked as support, later on it did not work as resistance, and therefore the breakout is not clean anymore. Okay, you may want to let that breakout go, even if after that, well, you know, it might keep on going down or up. You never know. You never know in forex what might be next. But what it is important is that the level you were keeping an eye on, the key level on this setup to keep an eye on, like I say, the flat bottom triangle's bottom, it just didn't work as resistance, and therefore the breakout was not confirmed. Okay, you might be indeed facing what I was saying before, a fake out. Price dives down, you know, some stop losses or some orders are hitting the market, and the large players simply push price back up, okay, in order to generate some losses to those people. So like I say, it's always nice to see that the key level on this setup is respected up on the pullback, okay, and from there to see a momentum bar in the direction of the breakout. Once that happens, if all of those elements do happen, you have all the chances on your side in order to score a nice profitable short entry. Finally, I'm going to be showing you what a flat top triangle is. Okay, as I was saying, it's basically the same thing. It is clearly seen in this chart. Oops, 1 second, let me define that properly. Okay, there we are. that being the flat top triangle's top, and this being the bottom. As you can see, we make price comes from below, okay, enters an area of consolidation, basically of sideways price action. We have different bars, different swings topping out at this level, okay, whereas the lows for those swings are they make consecutive higher lows, okay. Basically we have the lows forming an up leaning or up sloping trend line, whereas the highs simply make a horizontal line. That means that these are the best last line of defense. The bulls keep charging on all the way up, okay, trying to, or effectively building up pressure to the upside into this key level, and once that level gives way, well, it's green lights to ride the new swing for a profit, okay, as we can see here. As I was saying, it's basically the same thing as the flat bottom triangle. We have a very clear level of reference, a clear level that you want to keep an eye on, not only for the breakout, but also for the pullback once that happens. And as usual, the breakout we will look for the pullback continuation pattern, breakout pullback continuation pattern in the trigger chart. Since our setup chart is the hourly time frame, I will search for my entry on the 15-minute chart. Always remember that my setup chart, actually my trigger chart, is 4 times shorter or smaller than my setup chart, okay. So since this is the 1 hour time frame, I will zoom into the 15-minute chart in order to search for an entry. All right, let me try to find, there it is, there's the triangle. Okay, let me redefine a little bit better the lines. There we are. So as you can see, basically we have a breakout, okay, then we have a pullback and a continuation. In fact, in this case, our trade was triggered right there. Our long trade was triggered right there. This being the breakout, then we have a one long red bar, okay, retesting the triangle top. In fact, it overshot a little bit. Let me zoom in a little bit so you guys can see that better. Okay, right there. In fact, it overshot a little bit, as we can see on this chart. Okay, we had the breakout. Then we were keeping an eye on this previous level, on the previous flat top triangle stop, in order to wait for a pullback, and from there search for a long entry. We did get the pullback, all right, signified by that red bar. And as the continuation part took place, right there we were triggered long in this market, okay. Stop loss would have been placed down here below the breakout pullback continuation thrust. However, I don't want to get into stop losses, into stop loss placement, because that's covered in another chapter of this trading course. All right, yes, for your information, it would have been placed down here. But like I say, don't pay too much attention now on the stop losses or profit takings, because that will be covered on future videos. Anyway, like I was saying, the entry price would have been right there. Price after that, in fact, retraces once again, and it found support once again to this level. Okay, that means that in fact this level was former resistance, now working as support. The setup is valid, and we are good to go. As I was saying, our long entry is safe. Okay, that's the beauty of flat top or flat bottom triangles. We have a key level to keep an eye on. If that level gives way, we know that something might not be all right. Okay, here, like I was saying before, it overshot a little bit. That's not a big deal. As I always say, markets are not perfect. You cannot expect levels of support and resistance to be respected right to the pip. Okay, that never happens, or very rarely happens. Okay, but nonetheless, here basically up on the breakout and the pullback, it was just a very briefly, very briefly breached through. All right, immediately after it went back up. Once that happens and we make new highs right there, okay, we can we can label this breakout as confirmed, and we are good to go for the long entry. Even though we retrace a little bit after that up on the entry. That's the beauty of stacking up chances on your side. Eventually, even if you go through a small drawdown, or let's say a pullback, a retracement against your trade, the overall market sentiment in this case, remember we were in an uptrend, okay. The overall market sentiment, the fact that we broke out in the direction of the main market sentiment, and the fact that we also confirmed the breakout with a breakout pullback continuation pattern, will eventually muscle most of the time price in our direction, and we'll be able to score a profit on this long entry. Like I always say that trading is about stacking odds on your favor, and basically trading in the direction of the main trend, a breakout in the direction of the main trend, and with the confirming pattern of a breakout pullback continuation, it stacks up different chances, different odds on your favor, and that's the type of trading situation you want to be involved with when you have the chances on your side. So even if your trade gets a brief retracement, okay, against you, you are still carrying the chances on your side, and eventually that overall up mood on this market, this overall up momentum will prevail. And most often than not, sometimes you will score losing trades. Every trader scores losing trades here and there, but most of the times, I was saying 70, 65, 80% of the times of the trade will be a winner, and you'll be able to squeeze some profits out of this trade. Okay. Well, guys, that's basically it for this triangles. Always keep an eye, always keep in mind three different aspects. First of all, always in direction of the main trend. Second, only breakouts that take place in the direction of the overall market sentiment. And finally, the third aspect is trading the breakout, pullback, continuation, confirmation of the breakout. If you have those three elements on your favor, as I was saying before, you are trading with the odds stacking up on your favor. Okay, guys, that's all for this video. It's getting too long already, so let me close it down. If you have any type of question, please don't hesitate to send me an email. I will very gladly answer back all your questions. And always please remember that the most important thing in trading is experience and screen time. So it might be a good idea if you scroll back in your chart, try to spot a healthy trend, and then try to spot triangular formations, triangular price formations on those trending scenarios, in order to see how a breakout in the direction of the main trend would have played out. Okay, I'm sure you will find it very pleasing and very surprising how in the long term more trades than not would have become a winner. Okay, alright guys, that's all for this video. I will be seeing you on the next one. Bye bye.